Welcome to the Radio Revenue Podcast. Today we're embarking on a really fascinating deep dive into NetApp Inc. Now, for those maybe less familiar, NetApp is this huge, crucial player working behind the scenes. They provide what they call intelligent data infrastructure, basically helping organizations manage these just vast oceans of data they have.
That's right. It's really the kind of the backbone supporting so much of our digital world.
Exactly. And we're about to pull back the curtain on how they operate.
And the map we're using for this exploration, if you will, is NetApp's latest Form 10K annual report. This covers their fiscal year that ended April 25, 2025.
Right, the 10K.
And this isn't just, a simple summary. It's a really comprehensive filing with the SEC. Super detailed, gives you an unparalleled look inside.
Absolutely. So our mission today is to really unpack this thing, not just skim it, but extract the key insights. We want to understand NetApp's core business, their financials, their strategy, and importantly, the risks they're dealing with. Think of this as your shortcut, really, to getting properly informed about a major tech company's financial drivers.
These reports, they're like treasure troves, honestly.
They really are. And we expect to uncover some surprising facts, some crucial details, things that affect not just NetApp, but, the whole tech and data management scene.
And we'll be looking at it all through that lens of financial health and, well, revenue.
Okay, let's unpack this then. The 10K mentions NetApp started way back in 1992, based in San Jose, California. But beyond that history, what is NetApp's sort of secret sauce? How do they actually deliver this seamless, dynamic, and higher-performing data infrastructure?
Well, what's really compelling is how they frame it as intelligent data infrastructure. It's not just storage. It involves unified solutions, active data management, thinking about security, compliance, even sustainability, and it's all geared for, adaptive operations.
Adaptive operations.
Yeah, and if you look at the bigger picture, they're integrating hybrid and multi-cloud environments really tightly. This lets them tackle some huge priorities for customers today. Things like modernizing old systems, boosting ransomware resilience, which is massive now, and also building out these scalable data pipelines, especially for, AI workloads, artificial intelligence.
And it's really crucial for you listening to grasp this because, we're all increasingly reliant on data, on AI, understanding the backbone, the infrastructure that manages all that. It's essential. It affects efficiency, innovation, profitability, everything, really. Okay, so intelligent data infrastructure is the core idea. How does NetApp break that down in terms of their business? The 10K talks about two main segments, right? Hybrid cloud and public cloud.
That's right.
Let's start with hybrid cloud. This sounds like it's about modernizing the traditional data center.
Yeah.
Kind of bridging the gap between on-prem, private cloud, and public cloud stuff.
Exactly. It's designed to be super versatile, handles pretty much any environment, any workload, and they specifically call out the strategic enterprise AI market here too. It manages both structured and unstructured data, which is often a big headache for companies.
So what are the key technologies within that hybrid segment?
The absolute foundation is their NetApp ONTAP software. You can think of ONTAP as sort of the operating system for data storage and management. It handles how data is stored, protected, moved, whether it's on-site or in a cloud. It's the brains, really.
The brains, okay.
And the 10K highlights some key features, like its AI-powered automatic ransomware protection. That's a big one.
Definitely.
Plus things like storage efficiency. And they have this whole suite of Snap features.
Some app features like what?
Well, there's NetApp Snapshot that gives you instant point-in-time copies without hurting performance. Then Snap Center for backup and recovery. Snap Mirror for replicating data, moving it for disaster recovery, and Snap Lock for making data unchangeable for compliance.
Wow, that Snap Suite sounds pretty comprehensive. Covers a lot of bases for protection and recovery.
It really does. It enables everything from, instant backups to rapid disaster recovery, meeting regulatory needs. It's all about business continuity.
That suite really speaks to resilience, doesn't it? Which part do you think really differentiates them in protecting data today?
It's probably the combination, but that automatic AI-driven ransomware protection within ONTAP, that's becoming absolutely critical. It gives businesses that proactive defense and quick recovery capability that they need it now.
And what are the actual hardware, the storage infrastructure itself?
Right, so they have the all-flash FAS or AFF A series. That's for top-tier low-latency performance. Then there's the AFF C series. That one's positioned as balancing performance with affordability and sustainability.
Okay, different tiers.
Yeah. And then there's the all-flash SAN array, the ASA A series and C series. This is where they make some pretty bold claims.
Oh, yeah. Like what?
Like a 99.9999% guaranteed uptime. 6 nines.
6 nines. Wow. That's
Yep.
barely any downtime at all.
Practically none, maybe 30 seconds a year, unplanned. And they also guarantee 4.1 storage efficiency.
4-to-1 storage efficiency.
Meaning you store 4 times the data in the same space. Plus, they still have their traditional FAS series and the EEF series for things like high bandwidth apps, real-time analytics.
That 6 nines uptime, that's more than just a tech spec, isn't it?
Yeah.
What does that actually mean for a customer's business? How does that help NetApp?
Oh, it's huge. That 6 nines means, like we said, almost zero unplanned downtime. Think about e-commerce, finance, healthcare. For them, downtime isn't just inconvenient. It's potentially millions in lost revenue, reputational damage, recovery costs. It's catastrophic. So for NetApp, offering that guarantee builds incredible trust, loyalty. Customers just can't afford to risk switching to something less reliable. It creates sticky, recurring revenue.
And the 4.1 efficiency.
That directly cuts costs. Less hardware, less power, cooling, data center space. All for the same amount of data. It hits the bottom line, their operating expenses. Big savings.
Okay, so that covers the hybrid and on-prem side pretty well. But we live in a cloud-first world, increasingly. How does NetApp play there? That brings us to their public cloud segment. This is more as a service, right?
Exactly. And their big claim here, which is quite unique, is that they're the only provider of enterprise-grade storage services natively embedded in the world's largest public clouds.
Natively embedded, so like right inside AWS, Azure, and Google Cloud.
Precisely. They list Azure NetApp files, Amazon FSx for NetApp ONTAP, and Google Cloud NetApp volumes. Being native means it's deeply integrated. Better performance, lower latency, easier management compared to, solutions just bolted on top. It's a significant strategic edge.
And how do they manage all this complexity across different clouds and on-prem?
That's where NetApp BlueXP comes in. It's pitched as this unified control plane.
A single dashboard.
Sort of like a smart assistant, yeah.
Yeah.
Managing all your hybrid multi-cloud stuff from one place. And BlueXP itself has AI features built in, like BlueXP classification that helps find and tag sensitive data for GDPR or CCPA compliance automatically.
Useful.
And BlueXP ransomware protection for, detecting threats and recovering quickly in the cloud too. Plus operational insights, and through that InstaCluster acquisition, managed open source databases.
Understanding these solutions is pretty vital, isn't it? Because they directly help companies use their cloud data better, boost productivity, cut costs.
Absolutely. It can fundamentally change how a CFO looks at IT spending, moving from big upfront capital costs to more predictable operating expenses.
Which directly impacts their financial health, their ability to, grow revenue. Okay, so we've got the strategy, the tech. How did this all translate into actual financial performance for the last fiscal year? Let's get into the numbers from the 10K ending April 25, 2025.
Right, the bottom line.
Net revenues were up about 5% compared to the year before, reached $6.57 billion. That's pretty substantial.
$6,572 million, yeah. Solid growth.
And their gross margin was strong at 70%. Income from operations hit 20% of those net revenues.
And connecting that further down, net income landed at $1,186 million. That's $1.186 billion. Diluted net income per share came in at $5.66.
So how does that compare to the year before, FY24?
It shows healthy growth. FY24 net income was $986 million, and diluted EPS was 4.63 cents. So you see a decent jump in both top-line revenue and bottom-line profitability per share.
Good indicators. And what about how they use their capital allocation?
They were quite active. The report shows they bought back 10.2 million shares of their stock, spent $1.2 billion doing that.
Which often signals management thinks the stock is maybe undervalued.
Confidence.
It can suggest that, yeah. Plus, they paid out dividends. Declared $2.08 per share in cash dividends for the year. That was about $424 million paid out to shareholders.
Okay. Buybacks and dividends. What else stood out financially?
Well, they did have $83 million in expenses tied to restructuring plans. So likely some streamlining or reprioritizing going on.
Optimization.
And on the debt side, they issued $1.25 billion in new senior notes back in March 2025. That brings their total outstanding debt up to $3.25 billion, likely using that capital for investments or maybe managing their balance sheet.
So taking all that together, the revenue growth, profits, buybacks, dividends, restructuring, new debt, what does it tell us about their financial health? how they're managing capital for the long run.
Well, it paints a picture of a, pretty healthy, mature company. The revenue and income growth, market demand is there. The buybacks and dividends show a commitment to returning capital to shareholders, which investors like.
The restructuring suggests they're trying to stay efficient. And the debt, while it adds leverage, could be smart if used for strategic growth or refinancing. It suggests a balance, reinvesting but also rewarding shareholders while keeping financial flexibility.
Okay, now this is where, for me, it gets really interesting. The risks section in the 10K. It's not just tech stuff, is it?
Not at all. It's broad.
They start with the big picture. Global, economic, and geopolitical conditions. Things like inflation, slower growth, political instability, even regional conflicts, military warfare, plus those ongoing supply chain interruptions.
And for a global giant like NetApp, these aren't just headlines, right? They hit harder.
Exactly. How does that compare to maybe a smaller, newer company?
Well, the 10K gets specific. It mentions changes and uncertainty in global trade controls like tariffs, sanctions. It explicitly calls out trade tensions between the U.S. and China.
Still a factor.
Definitely. And Russia's actions in Ukraine, plus the potential for retaliatory trade actions. For a company with a global footprint like NetApp supply chain, customers everywhere, these things directly disrupt component flows, raise costs, complicate sales, block markets. It hits revenue and profits directly.
Makes sense.
Yeah.
Okay, moving on to market and operational risks. They talk about keeping up with rapid industry, technological, or market changes. That's constant pressure in tech.
Huge pressure.
And they also mentioned this shift towards simpler solutions and new consumption models, like cloud storage, IT as a service, and how that changes revenue recognition. That feels like a big transition.
It absolutely is. And it raises questions about their flexibility. They note the difficulty in reducing expenses quickly if demand declines, a classic big company challenge.
Fiscal costs.
Right. And they're making huge investments in R&D and systems just to stay competitive. They specifically mention implementing a new enterprise resource planning ERP system.
The dreaded ERP implementation.
Exactly. Necessary, but always carries risk. Potential for major disruption during this transition could mess up anything from billing to delivery if it goes wrong.
Okay. And then there's the elephant in the room for any tech company. Cybersecurity.
Always.
NetApp outlines their measures, risk assessment, monitoring, a 247 Security Operations Center, SOC, but they still acknowledge cyber attacks and security breaches continue to increase.
Yeah, including things like supply chain attacks against software development. It's a constant battle, an arms race, really.
It seems relentless.
It is. And beyond external attacks, there's always the risk of, product defects or security vulnerabilities within their own software. If something like that leads to data loss or instability for a customer, even if it wasn't strictly NetApp's fault in an attack sense, the reputational damage could be immense. It hits future sales, contracts, trust.
Absolutely critical. And for you, the listener, understanding these risks is just vital for judging a company's resilience, its future stability, its future revenue. Really, it's not just about today.
It's about what could trip them up tomorrow.
Okay, finally, there's a bit on legal and corporate governance. They mention some patent litigation, which isn't uncommon in tech, and also their reliance on third-party software, including open source, which can sometimes bring its own vulnerabilities.
Right. But what's quite insightful is the detail they provide on their insider trading policy. It serves as a really clear example of their internal controls.
How so?
Well, they actually define material non-public information, or MNPI. They give examples like worldwide hybrid cloud bookings or billings, future earnings or losses, even significant technology events. It's not just about the financials, it's anything that could give someone an unfair trading edge.
Making it crystal clear.
Exactly. And the policy flat out prohibits trading in derivatives using shares for margin loans. And it specifies cooling off periods for something called Rule 10b5-1 plans.
Okay, Rule 10b5-1 plans. Can you quickly explain what those are and why the cooling off periods matter?
Sure. Rule 10b5-1 plans are basically pre-scheduled trading plans. Executives, insiders, they set them up in advance to buy or sell stock at a future date. It's a way to trade legally, providing a defense against insider trading claims, because the decision was made before they had any sensitive non-public info.
Ah, okay. Predetermined trades.
Right. And the cooling off periods are mandatory waiting times, 90 to 120 days for top execs and board members, 30 days for others between setting up the plan and the first trade happening. This delay adds a buffer. It ensures the plan isn't based on some immediate secret information they just got. It promotes transparency, prevents unfair advantages. It's about market integrity, protecting all shareholders.
That's a great explanation. Shows how regulations and internal rules work together to keep the market fair. So to wrap things up, we've really dug into how NetApp operates, haven't we? Empowering customers with this intelligent data infrastructure, looking at their hybrid and public cloud approaches. We examined their financials for fiscal 2025, saw solid growth in revenue, profit, and how they're allocating capital with buybacks and dividends.
A strong performance overall.
And then we explored that whole landscape of risks: global economy, geopolitics, market shifts, operations, cybersecurity. It really underscores how valuable these 10K documents are for getting a full, transparent picture of a company's health and its future path.
And it does raise an important question for you, the listener, to think about. How do all these pieces, the innovation, the strategy, the risk management, the financial decisions, how do they all ultimately translate into long-term value for the company, for its shareholders? It's this constant interplay, isn't it, between the tech, the market, the money. It's always shifting.
It really is. And if you connect this to the bigger picture, data and AI are just everywhere now, shaping everything. Companies like NetApp building these resilient, intelligent data foundations, they're not just supporting businesses, they're kind of fundamentally shaping the economy itself. Which leaves us wondering, what's next? What's the next frontier in data management that could really shift their revenue streams again, or even change what intelligent data infrastructure means down the line? Food for thought. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.